Welcome back. Well, the management of GMR Group visited CNBC-TV18 studios over the midweek trading holiday to participate in the town hall with Jefferies global strategist Chris Woods. Remember, Jefferies has included GMR Airports in its India long-only portfolio at the expense of weight cuts in stocks like Axis, HDFC Bank, as well as ICICI Bank. Well, my colleague Vivek caught up with Mr. Chawla of GMR Group to learn about the road ahead for GMR Airports. Let's listen in to what he had to say.
Well, in the aviation sector, or I would actually be more specific in the airport sector, we are at a very sweet spot. Over the last 10 to 15 years, there's been much better clarity on the regulations. You know, the interpretation of the concession agreement was a major concern in the earlier part of privatization of airports. But now, both the regulator and the companies which are in this space very well understand what is the whole dynamics and the understanding behind those provisions which are there. So the second part is, if you look at the per capita income of India, it's around $2,500. And you correlate what happened when Chinese per capita income of $2,500 was. As the per capita income increases, there is a dramatic shift that starts to happen from railways or roadways into the air aviation. So we expect as we go forward a tremendous amount of tailwind to come in the passenger growth. The key risk in this whole scheme of things is the supply chain issues on the supply of aircraft. So, you see, people struggling to get the aircrafts, but I think, India is such a large market now. There'll be a lot of focus of both aircraft manufacturers, Airbus and Boeing, to supply into this market. It is the third largest country in this particular space after China and US. So we are quite well positioned. I think it's a decadal story now. And all that we need to do is don't disturb with tweaking in regulations, bring more clarity, and there'll be more capital flow and more passenger growth in this particular sector.
So your two key asks are, number one, stability as far as policy is concerned, and number two, one question that you asked, Chris, was a deepening as far as the bond market was concerned, especially for infrastructure. Could you explain the rationale behind, number one, why do you expect that? And number two, how will a player like you benefit from the most likely lower financing costs? Does that make you a little bit more aggressive in terms of getting newer airports onto your roster or your portfolio?
You see, our concessions are usually 60-year concessions. So, you're planning your finances depending upon the whole concession period rather than 5 years. So when I talked about deepening of the debt capital markets is, how can we, take the dated bonds to 10 years, to 15 years, to 30 years? If you look at US 30-year bond market is pretty deep, and hence they can really finance their infrastructure investments over there. In India, we are far too focused on the equity markets, and we just forget that much bigger than the equity markets is actually debt capital markets, and that is where I think the government should focus more. I think Utpal's briefing on things coming together now, finally, hopefully I think that will get reflected in the budget also. Previously, we used to tap into the dollar bond markets. Of course, last 1.5 years, dollar bond markets are not competitive with the rupee bond markets. But again, here we are still pretty much restricted to between 5 to 10 years. We want to take it to 20, 25, 30 years. That's where it is important that pension funds, infrastructure funds, insurance companies play a much bigger role. It's not a mutual fund market, but it's a very long investor market in that sense.
Thank you so much for bringing up that important point. Last question from you. India has spoken about increasing the number of airports quite dramatically over the next few years. How will a player like you participate in this particular growing opportunity? And not only in India, you also have and you operate airports abroad. So how do you see the dynamics change both in India as well as abroad? And how will GMR Airports and investors benefit from that particular journey?
So honestly, in our business model, new airports coming into our fold are very opportunistic. We are already more than 100 million capacity and traffic through our airports. And this is growing between 10 to 15% every year. So, I mean, 15 million passengers growth organically is good enough. That means adding almost 2 medium-sized airports every year in our portfolio. But yes, passenger experience, working with airlines to make different hubs, taking passengers into the hinterland, connecting them globally. I think with these privatizations, it will be very helpful in taking world into tier 2, tier 3 cities and allowing, of course, tier 2, tier 3 cities to fly into the global world. So, I mean, it's an important part of globalization, and hopefully, I think last announcement of the government was that they're going to bring about 13 odd airports for privatization. I think now the elections are over. Hopefully, I think that will come sooner than later. So that will be very important for the whole sector. We will, of course, participate in it in a disciplined fashion.
Right, interesting conversation out there with the management of GMR Airports.